What's going on, guys? It's Squire Trades here, back with another episode. And today, I want to talk about something that I've never really compared or brought up on the channel before, and that is current price action versus historical price action, right? And effectively, all I want to show you guys is the Nasdaq's daily chart. And we're going to cover kind of just this year compared to last year from a daily and potentially from a weekly perspective as well. So here's kind of what I see. If you zoom out, we'll throw ourselves a vertical line at the start of this year. This is the start of this year. And then we'll throw ourselves another line at the beginning of 2024. So I'm also going to go ahead and throw another one here at 2023 just for fun. So let's compare these years, right? Already, so we'll start with 2023 and then we'll kind of work our way forwards, right? So as we began 2023, we were coming out of 2022 after a massive trend bearish, right? I would even be willing to bet potentially that this draws us all the way down into a discount. Sure enough, it does. I'd also be willing to bet that it lines up with the fair value gap. Sure enough, it does. We have these monthly bullish fair value gaps here that you can see price wicked into a few times before inevitably creating its market structure shift, having its, not only is it a market structure shift, right? We've got this fair value gap here, but this also becomes a breaker. And you've got your breaker and your fair value gaps overlapping, right? So you can reasonably say that in 2023, when price came into this area, I mean, you were interested. You had this big leg up. We retraced half the move, came back into discount, even got all the way down to the 6.2 level, found support in these fair value gaps. You could even say this is sell-side liquidity. And we swept this sell-side liquidity, right? Everything at this point in time was just screaming, hey, man, you need to get long. And then at this point here, when we retraced into this fair value gap in this breaker, you're thinking, holy, we need to get long. And you could have just gotten long to this buy-side liquidity here if you wanted to. And even that, even if you said, I'm going to swing some calls, and you had this kind of stop, right? You're looking at almost a 3R trade on the monthly chart, right? That's clean. That's beautiful. You can't ask for much better. But if you drop down to the week even, right? You've got this that we left up here back in 2022. We've got this high, relative equal highs, right? So you can reasonably assume this would be a really good draw on liquidity at some point in time, right? This is kind of when we made our run down. Boom. Here we are in discount. This is your swing point, market structure shift. Continue. What do we do here? We consolidate for about a month, and then we continue. And then what do we do after that? Well, you can draw yourself a nice little range here. You'll see, came down, boom. Now we're into discount. What do you see here? Swing high, low, high, low, high, low, swept all this liquidity, came down into discount. And then what do you have? You got a market structure shift here. So at this point, after seeing our confirmed market structure shift, and also you've got this bullish fair value gap, one here. Boom. And you've also got a second one here. Boom. And we retrace down into it for only 1 week. But after that week and seeing this candle closes reaction, this is a super bullish candle, right? So that next week, we can be thinking, well, we've got to at least go get this external, right? So you could at least be targeting, coming in early in this week, you could be targeting this buy side liquidity. And then we displace. And when we displaced, what did we do as we came into 2024? We created a fair value gap. Okay, that's awesome. What else? Well, we had a deep drive into it, but also at the same time, you'll see that we respected it. Look at this. I mean, you can't make this up, right? And not only did we respect it, I'm willing to bet that once again, if you take your most recent price leg, your swing before the impulse, and you draw your fib, what are you going to see? You're going to see we came down into discount. You're going to see we have these fair value gaps here that we respected. You're going to see that we displaced, creating an inverse fair value gap here as well. Boom. Can kind of zoom that in and draw that out. Boom. Inverse fair value gap. You've got an actual bullish fair value gap. You come up here. What do? You create another inverse fair value gap at the close of, it looks like this candle here. You dip down, kind of retest some of this inverse fair value gap, fill in this inverse fair value gap, and we continue displacing, right? And then what do we do after we continue displacing? We kind of consolidate, accumulate, whichever word you prefer. And you'll never guess what we do after that. We come down, dip into it, respect it, and continue higher, right? So do you see how clean this is? You see how clean all this is? Look at this. You can't make this up. Enter beginning of last year's price action. Look at this compared to what we were just going over, right? This is disgusting. You aren't really going anywhere. You're kind of just consolidating back and forth in a range, then you manipulate, right? There's really nothing going on. And when there's nothing going on, there's nothing to trade. Can you maybe dig down onto some lower time frames here and find something to trade? Yes. But to a very large degree, I'm saying that kind of this whole box here, that is why I'm deeming untradeable price action. And, you know, there's a nice bearish trend here. So 1, 2, 3, 4 days in a row where we delivered some bearish price action. Outside of that, there is no trend here. Do you sometimes create like a bullish fair value gap? Yes. But what's your market structure there? I mean, I get that we're long, so you can just continue to try and play long. And that would have worked for about 2 days until we slam through. We create an inverse fair value gap here. And then look, sweep buy side, sweep sell side, sweep buy side, sweep sell side, sweep even more sell side here. And it's just chopping back and forth in the range, right? Nothing good. Once we come out of this consolidation after this manipulation, we continue to distribute. And it gets a little easier, right? Bullish, 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 all bullish, all bullish. Boom, you've got another fair value gap here. Boom, right? What do? You can catch this short run early here. Boom, boom, bullish, bullish. This was maybe even a good day too, depending on how the open went, right? And then we come back down. What do? We sweep this sell side liquidity. We leave a long wick. This is called a swing failure pattern from ICT, otherwise known as turtle soup, whichever you prefer. We displace, create an inverse fair value gap. What do once again? Boom, another fair value gap, dip into the fair value gap. What do we do afterwards? Continue to displace, right? Do you see how clean this is? And for the sake of how long this video is already, let's just jump ahead to current day's price action. What do you guys see here? I see, personally, right? You see how this is trend-based? Trend, 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 trend. And then things kind of get wonky here. This is just doing nothing. And I say that, right? And you can make the argument that, well, okay, but this was a very large move. This was almost a 25% move in the market, something like that, right? And that's a long move. That is a big move. It's huge. And then we retrace the whole thing, right? It's just a big V. Boom, boom. There's no real trend. And it's actually very confusing because most of this is driven by news. So you can kind of see here, after this massive push down, there's no clean market structure shift. In fact, this would be our area where there is a market structure shift here. And what do? We sweep it back inside the range. Nothing. There's not even a market structure shift here, really. And then we continue up. What do we do after we sweep this buy-side liquidity? Consolidate. Chop. Again, chop, 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 chop. No daily fair value gaps, no displacement. Finally, we get some displacement long. We inverse this fair value gap, whatever else. We get some displacement long here, and this is beautiful. Chop, 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 chop. Continue displacing. Now we're at all-time highs. Now it's just chopping, man. This is all accumulation here. Every bit of this. This is all accumulation. Just chop. Nothing to trade there. It's trash. Until finally, we get a little bit of direction. We're moving down, right? But there's a couple of fair value gaps here. But outside of these, early on, look at this. This is all chop. Chop. Small fair value gap immediately gets disrespected. You can argue this is a market structure shift bullish, market structure shift fair value gap. What happens after that? Displace down. Actually create a market structure shift bearish once again. This is a really weird candle in that it takes out both sides and closes bullish, right? And then this massive gap down overnight, largely driven by news. Massive candle like this. Here's your swing point for a market structure shift. Consolidate. Tiny range-bound daily candles. Finally, we get a little bit of movement. But guess what? Once again, this is a massive gap overnight. No opportunity there. Nothing to be done. Shocker. We finally dip down into it. After dipping down, we kind of displaced for one day. The day after that, no movement. Came into this daily fair value gap, respected it. Again, no movement. Failure to displace, sweeping high, back inside the range. Nothing going on. Not a single thing. Right? But you can assume, since we're bullish on the month, currently we're bullish on the month. We're bullish on the monthly time frame, bullish on the weekly time frame, bullish kind of just in general. But this is untradeable. There has to be something better than this. And I just showed you from this price action back here. This is clean. This is good movement. You can identify trends in this. You can trade this. There's fair value gaps. There's movement, right? There's not really weird candles, Go in price and find me candles like this. Big gaps. Big gaps. Big gaps. Weird wicks. Like, find me another time literally in history where we've seen price like this. I don't believe you can. And from the couple of years of price that I just reviewed, it's difficult. All that saying, if you're going through a hard time right now, give yourself a break. Relax. This is the hardest market many veteran traders have seen I know one guy who's been in this game for 33 years. And he says this is right up there with the hardest market conditions he's ever seen. Give yourself a break. Give yourself some grace. Go outside and do something. Hope you've enjoyed comparing prior price action to current price action. It's been Squire Trades. Today's June 17th at 5:08 p.m. And we'll see you back tomorrow.